Welcome to this week's look at the state of the New York City real estate market. This is for the week of April 22nd to the 28th. I'm going to be covering what's happening in the luxury market, the Manhattan market, and the Brooklyn market. Then at the end, I'm going to sum it up and give you my thoughts and takeaways. As always, if you have any questions at all, please post them below or reach out to me directly at Sotheby's. Before we get started, I want to say this. We are definitely seeing a kind of shift in this market. We started out very, very strong at the beginning of this year. We are now starting to see signs of change. I will get into that in more detail, so you're going to want to stick around for this, especially if you are an active buyer or seller, or you are a property owner and you want to see how this current market is affecting your position. I will also say this does seem to be a tale of two markets. And you might wonder what that means. I'm going to get into that as well. So stick around. Okay, we're going to get started with the luxury market. There were 29 contracts signed in the luxury market. As usual, condos outsold co-ops 21 to 3, and there were 5 townhouses in the mix. 20 were uptown and 9 were downtown. The number one contract was apartment 47 BC at 1 Central Park West. It was asking $27,500,000. It has been on and off the market since September of 2022. It was starting as high as $39 million. This is a condo. It has 6,360 square feet. It has 5 bedrooms, 6 bathrooms, and 2 powder rooms. The living room, library, dining room, den, and master bedroom span over 75 square feet, and all of those overlook Central Park. Interestingly, the seller paid $25 million in March of 2018 and then extensively renovated the property. The amenities in this building include a concierge, doorman, fitness center, and a 55-foot indoor pool. On the ground floor is Nougatine, Jean-Georges 2-star Michelin restaurant. The number 2 contract was a townhouse at 110 East 70th Street, asking $25 million. It's been on and off the market since March of 2022. It started as high as $32 million. It is a 20-foot wide 6-story house. It was purchased for $10 million back in July of 2012, and it underwent a multi-year renovation by architect Stephen Harris. The house is over 10,000 square feet. It includes 7 bedrooms, 7 bathrooms, and 2 powder rooms. It has an elevator and a 28-foot pool in the basement. Last week, the total weekly asking price sales volume, $263,547,100. Average asking price, $9,087,831. Median asking price, $6,350,000. Average discount from original ask to last asking price, 12%. Average days on market, 695. Okay. That is it for the luxury market. We're going to shift now and take a look at what's happening in Manhattan. The supply last week in Manhattan, 424 properties came on the market. That's down almost 2%. Contracts signed up almost 4%, 219. And off-market properties dropped a little over 2%, 131. For the month, the supply for new properties rose a little over 5%, 2002. Contracts signed 995, kind of a wash there, and 556 properties came off the market. That's up almost 28%. If we take a look at the market pulse, down almost a point from last month, down a percentage from last year, we can see we remain in this neutral territory. However, we are dropping a bit. And the liquidity pace chart showing us the 30-day moving window of contract activity shows contracts kind of rising just a little bit, 995. I wanted to share some rental information with you because the rental market and the sale market, while different from each other, of course, do have an impact on each other. And what we're seeing is that Manhattan asking rents are pushing to new highs even before the summer season starts. As leasing activity begins to heat up, what we're seeing is a kind of a pressure on this rental market, even in advance of when we would normally see it. that is definitely going to make it a little more difficult for people who are looking to rent and could well put a little pressure on the sale market as well. But we're going to keep an eye on that, and I will continue to keep you updated. If you have any questions about the Manhattan report, of course, post those below, or if you have any questions about this rental chart that I've just shared with you, let me know. The weekly supply for Brooklyn, 186, dropped almost 8%. Contracts signed, kind of a wash there, 143. And the off-market properties rose almost 54% for the week at 86. For the monthly look, 982 properties came on the market. That's up a little over 7%. Contracts signed up 2%, 613. And the off-market properties rose for the month, 271. That's up 39%. The market pulse in Brooklyn down 1% from last month, down 1.5% from last year. Also in the neutral territory, dropping just a little bit as we saw with Manhattan. The liquidity pace chart is showing 613 contracts signed over this 30-day period, and we continue to see kind of a neutral market in Brooklyn. Nothing too exciting there, but just kind of holding steady. If we look at the Brooklyn rental market, we also see that is also heating up, just as with Manhattan. The asking rents in Brooklyn are near their highs well before the summer season begins, and suggests that this could be a tight market in store this summer. So if you're someone who's thinking about renting, you may want to get out ahead of this market, because likely the further we move into the season for rentals, tougher the competition will be for you. Okay, that's it for Brooklyn. I'm going to sum this up now for you. What happened last week, what's happening in the market. As I said, there is a lot going on. We are seeing a shift, and this is definitely a tale of two markets. So be sure you stick around. Any questions, post them below. So what do I mean by a tale of two markets? Well, if you look at the luxury market, we see the luxury market is actually marching along quite well. 29 contracts signed last week. That is up by 1 from last week, up 11 from the previous week. Condos, as per usual, in the lead, 21 over 3 co-ops and 5 townhouses in the mix. The majority of those were uptown and some were downtown. 6 of those contracts were in the trophy category, meaning they were priced at $10 million and above. As I have been mentioning, many of these luxury deals are all cash. And that is likely explaining why the luxury part of the market is doing very well. Those buyers are less impacted by the interest rates, which have not really done what a lot of people were hoping, a lot of buyers were hoping that they were going to do, which is go down by now, but they really haven't. And they aren't really expected to for a little while, if at all. So we may be waiting around on that. That has definitely changed the direction of this spring market for the bulk of properties in Manhattan and Brooklyn. And I'm going to get into that now. So in Manhattan and Brooklyn, what is going on? Well, we continue to see Manhattan and Brooklyn in this kind of neutral place, unlike the first quarter of this year, which was quite frothy and lots of buyer activity, a lot of enthusiasm and a lot of action going on. Things have cooled, and we definitely saw a pullback in March in terms of the data. We saw fewer contracts. We don't have the data yet for April, but it does seem like things have quieted down. We may have seen the peak of the spring market. We'll have to wait and see how May shapes up, May just being right around the corner, a few days away. So while we continue to be in this neutral climate, prices have stabilized. Certainly, this is an improved market from a few months ago, last year, with prices that have stabilized and even gone up just a teeny tiny bit. This is a very price sensitive market, and we have seen a lot of buyers step back. So what does this mean? Well, if we look at the supply last week dropped about 2%. 424 properties came on the market. We've crossed now 7,000 properties in total for Manhattan. That is on trend for us. However, we have likely seen the peak of inventory, so not likely to see a whole lot more come on the market. Brooklyn, we saw a pullback of about 8% last week. 186 properties came on the market. We have in total a little north of 3,100 properties. Again, maybe nearing the peak there as well. Contracts signed, both Brooklyn and Manhattan moving sideways. Manhattan rose almost 4% last week. Brooklyn kind of flat for the week. Again, this market has quieted down. It's getting a little pokey. Let's call it that. Could that change in anytime soon? Yeah, it could. And we're going to keep an eye on it and see if it does. I did share with you some rental market charts because not everybody's looking to buy. Some people are looking to rent in both Manhattan and Brooklyn. If you are someone looking to rent, you want to get ready because it looks like the season is already underway. We are seeing prices kind of on the high side. We're seeing that the activity's already begun. So get ready. Get out there if you're looking to rent something and make sure you're ready to go, have your ducks in a row, because this could be a competitive season for rentals in both Manhattan and Brooklyn. And likely the inventory is going to be quite tight because a lot of people are staying put. It's just too challenging a market for them to be moving around. So a lot of people are just opting not to move. So if you are an active seller, what does this mean for you? Well, as I said, market conditions have definitely improved from the end of 2023, but this market has started to cool. So could the best days of the spring market be behind us? They could be. What does that mean? It means your pricing strategy is crucial, especially with mortgage rates continuing to impact affordability, especially if you are not in the luxury category. Do not delay with your price reductions. If you need them, you have about another month. If we look at the history of spring market activity, you don't want to be going into the summer. Summer is typically a very quiet time. So definitely try to get your deals done now in the next 30 days, meaning try to attract your buyers, get the traffic in, get those offers in, and get yourself into contract. Buyers, as I mentioned, we're in this neutral market. We have kind of dropped a little bit because the contract activity is going sideways, and we have a fair amount of inventory in Manhattan, not so very much in Brooklyn. So is it slightly favoring the buyers? In some cases it may be, but mostly it's a neutral market. If you have any, let's call it leverage right now, in addition to those properties that have been on the market for a while, your other opportunity may be to wait until the peak activity, meaning the spring season, is over, and you kind of bide your time and wait to see what is around in the summer, when there are definitely fewer buyers, historically speaking, and you can kind of look and see what is still around. That's an option, and that is a time when some buyers opt to make their move because that's when they find they may have a little more leverage. Be aware that prices have stabilized since last year, and they have even gone up slightly. Again, case by case. Don't count on huge discounts. This is not a bloodbath. So don't be thinking that, you're going to get like some steal of a deal. It's not like that. It's not that kind of market. It is a market where there is truly a kind of a balance between the buyers and the sellers. We don't often see that in the New York market, but we are seeing it now. And what that means is buyers and sellers are going to have to figure out a way to have a meeting of the minds. And it will not likely be, I win, you lose. It'll be kind of, okay, I have to give something to get something. And it may feel a little bit like you don't get everything you want, but rest assured the other side's not going to get everything they want either. So that goes for both buyers and sellers. So it's that kind of market. And I think people really do need to ask themselves, do you want to be a buyer or a seller in a market like this? And sometimes you have a choice about that and sometimes you don't. Anyway, that is something to be aware of. And I am happy to discuss that with you and share with you what I know and how to be successful in a market like this. It's not easy. Feel free to reach out to me. Feel free to post your questions below. Otherwise, that's it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and to the Olshan Luxury Report. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.